All right. All right. Peace and blessings, everybody. Welcome to South Factory Wednesdays. Another glorious Wednesdays. Hope happy to have y'all. Happy to have y'all. All right. So today we're gonna be going over long-term entries, right? I know a lot of people been asking. We brought this subject up over Saturday about buying in points in your long-term investings, right? Even in stock trading, if you want to like leverage into a position, when you catch a trend, great point to buy in. So there's multiple factors you can do. For as long term, you can use Fibonacci. For as continuation, short term, you can use moving averages, right? Right now I got three moving averages up here. These are all EMAs, set to different parameters. So we're gonna go over those EMAs and then we're gonna get cracking on this, right? And I'll show you how that pretty much function. So right now I'm at one, yeah, 34. Do, 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 do. So 34 is yellow, the 21 is red, the 55 is this pink cross, and the 200 is right here, right? So those the numbers we're using. These are buy-in numbers, right? These are a string retracement. All these numbers are very specific though, except the 200, right? These numbers are all Fibonacci numbers. These three here, the 21, 34, 55. These are all fibs. So you have a dynamic Fibonacci. Okay. So just like you have a field retracement ascension, these moving averages can be set to move with them, but you can still use the Fibonacci numbers in the moving averages when you set them. That way it's dynamic. It just moves with the chart. So it's continuous, right? The 200 is just a highly respected number that a lot of traders and investors use. Technically, if you want to turn this into a fib, you need to use 233, but you can. It's not much of a difference, but that's why I use the 200 because a lot of other people use it. So sometimes I use a combination of the 200, 233, just side by side to see the difference in angles, the degrees of change. But in general, you can use the 200. It's fine, right? That's the only one that's not a fib number. All right. So looking at this, right? Let's say you long term in Google, right? So as you see it coming down, this is on a weekly chart, by the way. You wanted to average in, you say, okay, cool, 2023, it already hit the 200, bouncing around these levels, and now it's coming back up. But I want a buy-in point, right? So every time I make a retracement, it's coming back to one of these movement averages. So 21 is a decent buy-in point. The 34 is a great buying point. So is the 55. So every time that stock hit these high term fibs, if it's really rocking, it's not going to come to the 55 or the 200 no time soon. You can get a 34 or a 21. For example, let's go over to AMD. This is Google right now. They are currently moving a little bit sluggish. They had their own issues to work out with their AI system. So that's more of a fundamental issue, reason why they running like that. But you come over to AMD. Now on a weekly chart, as you see, once it left the 21, it haven't made any type of return no time soon. Currently, it's finally starting to make a retracement to come back down and find some level of support. But we gotta ask ourselves when it's gonna come here. Now, one way to tell is a simple candle counting strategy, right? Because after so many candles, price will return back to the mean, right? For example, come back over here. We're gonna simply use date and price range too. This the twin, the red line. Remember, it's the 21. Boom. This how many days, weeks it took. This 98 bars, right? And it came back down to the 21. But this is a large time frame scale. If we go down to the daily chart real quick, we'll see. But once it is AMD, right? Now you'll see you get a little more consistency as far as the retracement goes, right? So this is about last time I touched 21, came back. So 36 days. Remember, AMD is a high flying company. It ain't gonna come back that often, right? And this is not gonna be one of those like, oh yeah, this is guaranteed on a dollar on this day, right? It's a ballpark 33 days. It like to come back to the 21. Knowing this, every time, boom, 28 days. Okay. Let's run it back again. This was the last time it was off. Touched again, 26 days. So you can start seeing the average time that they will retrace. Now, this time it came back a little bit faster, right? So 1, 2, 3, 4 days, and it kind of bounced around because now it's time for it to retrace back down to the 34. You know what I'm saying? Now to see, like, all right, when last time we touched 34, we got in the ballpark here, and we got a legit touch here. That was 76 days, right? So, like I told you, when it comes down to higher time frame buy-in moving averages, they're not going to touch that often if it's a high flying stock. Now, if it's a range trading stock and it's pretty much typically trading in the Pacific range, then yes, it will come to these moving averages a little bit faster. But if it's not, it will take a little bit longer to get. All right. So, did you want to use which tools you want to use for candles to see which candles you got? You come over here to your projection, then you come down here to measurements. All these tools are here. Price, date and price range. That's the one I'm currently using here to show you like how many days. It also got how much it moved per price test that you go from low to high. It'll give you the days, right? It also counts candle bars in days. So you can say, well, there's XYZ candles. All right. So we go back to the weekly. You want to say, man, what was the weekly 52-week high low? You can say, well, go back to the weekly and say, all right, 52 weeks. What is 52 weeks? Which is 52 candles, right? And they'll give you that range. But you can easily go to Yahoo Finance and get that same answer. 52 ranges, FY. Yeah. But yeah, you go over there to the drawing tools and you get that. You after a while, once you put a star by those tools, you can make you a nice little tool belt like this with different drawing tools you prefer to use on a regular basis. These are ones that I prefer to use when I'm doing my technical analysis, so they stay right here. I just kind of have them up out the way so I can quickly grab one and do what I need to do. Right. So let's clean this chart back up. Boom. As you see, but just think about it though, right? Now we're gonna run a fib. So you can check the retracement. Let's say you caught this breakout and you said, I'm going to have an order sitting at this high, right? Boom. We're going to run into this high here. And we're going to change this because I only want to focus on this one particular area here. Let's zoom in real quick. Okay. I like template 3. All right, cool. So let's say you took that breakout trade, right? You said, oh, I'm going to start buying in at the high. That way I know for sure it's actually breaking out. Cool. Now you bought in here at 100%. Price is 108, right? Right. Now you waiting on a retracement. What is that retracement? That's a 61% retracement. Happen to be at your 21 EMA, right? So you got the price of this AMD. You was able to add to your position 61% off, right? Cool. Now, what also you can do that on a higher time frame, you got a real strong bull market, right? That's just the power of the algo. You got the buy signal here. Great. Now, what you need to do is say, hey, set the algo for an alert for the sell signal. Normally, you get that sell signal pop up, you know for sure it's selling down. Okay, great. That's going to be a good buying opportunity. Remember, this is a bearish candle. So the candle opened here that day, but it closed down here, right back, retesting these lows for support. But still, just by simply setting a sell signal alert, you was able to walk away from this. Oh, I got my sell signal, the market going bearish. Now let me run my technicals, let me run my fibs to see what's the discount, right? But let's say you are a great trader, you get the best entry possible. You want to run to this low to the last swing high. That's how you're going to really run your fib, right? Boop, boop, boop. And you'll see buying in down here, that was only 23% off on the trend, but still the 20 wouldn't count you. But from your buy-in point, that was a great deal because that was 60%. It pulled back 60%. You got it 60% off. But if for the investors got it down here, they got a very great deal, but they ain't tripping on a 23% pullback. Most people want the 50 or the 61%, but they know good and well AMD is high flying. So that's why beggars don't be choosers. If the moving average caught support and you in it for the long haul, why not add to your position, right? So that's buy-in level number one, right? Now, once again, it found support. So let's say you're a next group of trader. You say, man, I'm gonna wait. Boom, you catch it here. You say, okay, cool. When the next time it came back again, that's a 50% discount back at your 21, right? So you bought it here at around 120 per share, right? You bought in a range of 116 to 120 and you stop buying after that level, whatever may be the said case. You rolled it up to 150 and then it came back down to 133. So that's 50% off, right? But using your moving averages and that you set your sell signal alerts, you know, like, hey, it was discounting. You could have bought in here or you kept your sell signal alert came in. You could have definitely know to start checking the chart here. You say, well, it's not at support, so I'm not going to buy it until it hits support. But you know to start watching now, right? Your second alert go off. Boom. There I go and buy it. Now, this also work great if you're using uh leaps. So using leaps, buying the said leaps, having those go off, right? Those are great because you can actually buy in, set them up, boom, make your money and go on about your business. And especially using the strategy poor man cover calls, right? Using poor man cover calls, you got a deep in the money contract. Let's say you got the contract for 116, you're currently at 150. Good deal. You know, for sure you can still sell contracts off of this, or you can add to that leap or pick up another contract around here knowing it's going to return back to the highs and you can keep rocking off like that because I know you may not add to the same contract or you want to double down and pick up a new contract so you can create a separate leg for that, right? Those are strategies that you can use inside the option market, which is always great, right? Always great strategies. Especially if you're gonna say you're selling cover calls or even doing credit spreads. You know, getting well, a sell signal, the algo gave you a sell signal. Everybody say it's a bullish market. So you selling calls to 150, you know, getting well is starting to sell off. And you looking for your support level. So you can actually let it go down to support, let day contract go to worthless. You collect your premiums, add to your AMD shares, or you can add another contract to your AMD Leap, right? Have somebody else pay for it. So this whole entire time, as you're gaining in value, you collecting premium from selling your poor man cover calls or doing credit spreads, and you just add into your current position, right? So bada boom, bada bing. Now let's run another, and let's change this color. It'll be a wave. Okay. So from this swing low, we'll take it up to this swing high here because it's another buying opportunity. We're currently at a high right now, right? Take it one. So let's say you got in, you seen it coming out support. You ain't gonna wait too long. You know it's a bull market. Your moving averages still spread apart, so that's all it was a pullback to support. You stop buying at 139, 140, give or take, right? Now you see price go up. Boom, it's stalling back out, coming back down to find support. This time it touched the 34 EMA, which is a 38% retracement. Still a decent pullback. 38% off is not bad. I like 50% or greater. That's how you know you're getting more bang for your buck, but you're also buying at all-time highs. So it's you kind of get to a tricky area up in here, right? But the 38% is a still decent buying point for you to add to that said position. Now, once you get past this position, then you want to be a little more particular about where you actually buying in because now you at all-time highs and you really got to start rethinking your averaging strategy, right? Because now price is at a super time high right now. It's all-time highs. It's really up there. It's overpriced, well over their valuation. Now you really need a bigger discount. So Instead of us adding another leg from here to there, that's kind of be crazy, right? Too overpriced. So let's scrap all of this, and then we're gonna show you what's the overall discount. So this is three buying points. We ain't gonna go and buy up here. That's way too high. That's us hoping things gonna continue running up. This when you already have shares or you have contracts. You just want to sit still and maintain your position. If you was taking profits, great. If you took some off the table, that way you out of the position and you just enjoying the ride. That's a smart thing to do, right? But in the meantime, you got a sell signal, so just let it play itself out. So let's clean this chart up and then want to run a new film, right? Since we've been rocking with these balls way back yonder, boom, we're gonna run this film right here. And we clearly see we barely at a 23% discount, right? Looking to come into this imbalance candle, where they currently at, they took this gap, they currently looking to come into the imbalance candle, right? On the weekly chart, you see we swept weekly lows and we're currently coming down, right? It's more intensive. So let's go back out to the weekly chart so we can kind of get less candles and make this look a little bit prettier. So if they've been overextended from the 21 EMA, that means a high probability that they can come back down here and find support. Now, let's add a fast moving average and see where are they currently sitting at. Okay, cool. Let's add the 5. So right now they barely coming down to the 5, right on the weekly chart. That's the white EMA. If they break this 5, then you know good and well they're gonna come down a little bit lower than that. Let's add a 13 real quick. Okay, cool. So this orange cross is 13, right? So they break that. Then we got a level here, 173, 160, 144. These are once you start getting down to 160, 144, those are great discount areas to buy in, right? For long-term usage, right? Unless the market is gonna go ahead, take a shift and go into a correction or a bear market, and then you're gonna be like, nah, I'm gonna wait until get down here to 120. But AMD is rocking right now. Nvidia is rocking. Nvidia is carrying the boat. I like this consolidation. And I mean, it could be a good stopping point at the 34, which will be at 144. So these are things you are thinking about as a long-term investor, as a long-term trader for swing trades or just buying and holding. Period. Right? Is where do you want to get in at, when and where? You don't want to just jump the gun because you got some free flow cash. You just don't want to just buy in anywhere. You want to make sure you pinpoint an accurate spot to buy in, unless you're buying companies that actually pay a dividend. So let's scroll over to what's that, Coca-Cola. Right. Now, if you look at it, see, we're gonna remove some of the slower EMAs off of here. Get that off. Get that off. All right. So as you see, they go sideways a lot, right? They dip down. This what they had in 23. Great buying spot, but they normally go sideways. So you get more buy-in opportunities here on this stock because it's not far away. They ain't got a wide spread. They ain't running off for the hills. So you can always buy more shares at a great price because stay in a tight range. That's what I mean by tight ranges. So we we kind of bump out to a monthly chart because that's where we're gonna find our discounts at, right? We find a discounts way out here, not on the lower time frames because it's not a high flyer. It's not flying off the hinges. It's safe and regular, degular, boring, right? This is what you want for its dividends. So that way you got time to buy a whole bunch of them, right? Without having to worry about somebody running the price up and you overpaying and stuff like that. But if you would have waited, you had to wait from April 22. That's when it set up the $67 per share, and it discounted just recently at October 23, right? I had my alert set here. As soon as it discount, I loaded the boat. I added more shares to my position because I was waiting for that discount. I was not gonna pay none of these prices because I know it needed a discount. So I simply ran my technicals, said, okay, cool, where are you going to discount at? Okay, great. You hit that alert, boom, nothing to talk about. I put money to the side for this. I let the dividends collect. So when it discount, I'm going to buy more, right? This one I load the boat. But in between that, since it stays in a tight range, I was not scared about buying more shares because when it do go on sale, I'm gonna add more to that said position and lower my cost per share down by dollar cost averaging, right? So when it goes on sale, you load the boat. When it's at a decent discount, like a 23.38, well, you can buy like a couple of shares here and there, right? But majority of shares should be bought at 50% or greater, right? As long as it's a good quality company. You don't want no companies running into the dirt and going out of business. No. 60%, 50% are great buying opportunities. Unless it's a pandemic or something crazy going on, they only come down here for catastrophic events, right? When they get into 78, 88s. Unless it's just something that's high flying like Tesla, Meta, Google, uh AMD, one of them tech companies. Tech companies fly out of control like that, right? We'll get over to some of those in a second. But when you're looking for steady, consistent companies, you can buy in here at decent time frames, go to lower time frames and catch your 23, 38% retracements, right? And bouncing it like that and just boom, 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 add to your position. But when it come down here, you load the boat. You can have a weekly buyer amount, but this is what you really should be loading up on when it discount to the 50% on the higher time frame. So when it really discount at a great uh level, you load the boat. You'll bring your shares down a whole bunch. Yes. We'll go to Verizon. All right. Now, hmm, let's run. Let's run the technicals, right? So we're gonna start this one from scratch. I don't hold Verizon, so we're gonna run down on this. I like to start from a 3 month chart, and we're just gonna simply run support and resistance. I want to go to the highest level, which is here. This is the highest they ever been. They recently returned back in 2019, but as you see, they failed to come back up to them all-time highs, right? So I'm gonna find some support real quick. All you need is 3 touches of the wick. I don't cross bodies. If it cuts through a body, it doesn't count for me. So I'm counting the wicks. I got multiple wicks here. Each candle represent 3 months. That's FY if you didn't know. I like to get as much support and resistance as possible. So old support become new resistance. You know, see, this was support level. Boom, now it's resistance. They had to break a structure. The algo called for the change of character. Then we had to break a structure. Now they retesting this old support. Now it's resistance. They retesting resistance right now. Look like they got rejected. We got 14 days for this quarter to close, and we're gonna see how they shape up. Let's go down to the 1 month real quick. Bada boom, bada bing. As you see, they've been here 1 month, 2 months. They got rejected this month. Now they just spinning. They could continue down or they can push up. We do have an OB right here, right? We have a nice little order block. We can pick these boys up, right? But let's run some fibs. We're gonna go from this swing high right here down to the low. All right. Currently, they've made a 38% retracement back to the upside, right? But we clearly see they currently in a nice little downtrend. But if we flip it and say, hey, your reality is back in 2010 and you caught this level over here, then you at a 78% discount. Now, if you bought in way back here in 2010 and your company been performing like this, it's not a good sign that they down here, right? During a pandemic, everybody got 2020 to 21, everybody got a surplus of money from the Federal Reserve pumping them up. What I noticed about a lot of these phone companies, they did not return back to a decent level, right? So what I mean by that, let's see. This is where they at 2020, right? Cool. This is their 2020 levels. All right, great. Pump money, pump money, pump money. Boom. 21 happened. They start sliding. Oh, the Fed's still pumping money in the market. They keep sliding. So that's telling you nobody liked them, right? They don't have a winning product no more. Somebody else got a competitive edge. Reason why T-Mobile, even though they got the worst service, cost share per cost is way more than Verizon because they was winning out with those cheap phone services. Go, you got to get on the fundamental side, right? When you start peeling back the layers of what they doing to gain customers and customer retention is different from Verizon. Verizon has stricter rules, so the people with the bad credit, yes, they don't mind the cheaper phones because they can't go to Verizon, right? They don't mind a bad service, but Verizon also offered no, T-Mobile's offering a lot of prepaid services and XYZ, blah blah blah, to bait people in to get more services, right? They kind of better customer retention. Then they start doing deals with Netflix. They start doing deals with United where you get free Wi-Fi if you are a T-Mobile customer. They start doing little partnerships like that to kind of give them a competitive edge when Verizon didn't. So yes, they have the bougie set of customers, but on the other standpoint, they cheese sliding, right? So they are currently at a 78% discount from 2010 levels, and they struggling to pull this together, right? So you're buying in down here, you're cool. You smooth selling. You go ahead, collect them, build a nice dividend portfolio. This the range they trading in. Let's go. Now we're gonna go down to the weekly chart. Do, 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 do. I'm sure they had a 52-week high. So do, 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 do. What we got? 51. All right. Yeah. Okay. Boom. So this is a 52-week range right here. Boom, 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 boom. Let's make this more a little more expressive so we can make that clear, make it where it's easy to see. Let's talk about it, right? So currently, last 52 weeks, Verizon been trading between 36.40 to 43.26 with a tightening of the range. So we can actually run a fib from here, right? Since it's been in a little uptrend, let's run a fib. They're currently at a 50-60% discount of the 52-week. All right, let's change this out. Oh. So they currently at a 50% discount, right? At a 52-week high low. Now, if you're just buying in at this moment, you know, like, okay, cool, I can add to my position because they do pay dividends and you can use that to some form of advantage to kind of gain in dividends versus what they lacking in value, right? Since they ain't putting out a great value, you can get that in, you know, dividends, get a return on it. So you look, they tight. Now they start falling. They get to sliding again. Want to get out of Dodge because this is a bear market, right? We retest the highs and we fail to get up there on the weekly. Same thing on the monthly. Now let's run those. Now we're going to add those moving averages back. We're trading below the 200. Anything below a 200 is a bear market, especially on the weekly. You don't ever want to be below a 200 on a weekly chart. That's just bad for business. Nobody like being below the 200 on a weekly. I don't like things that I hold long term below the 200 on a monthly. I mean on the daily. Oof. See, they're on a weekly too. Cheese be sliding. Yeah. And you got about to get a 55 crossing the 200. So on a daily, if you know about the 5200 crossover on the daily chart, they really use SMAs. That is called a death cross. Death cross is a market entering an extreme bear market when the 50 and the 200 cross. I use a 55. So when these two cross, that thing gonna go ugly. When they go low, when that 55, 200 cross, they go nasty. Okay, they gonna get nasty. It's already putting in a lower high. With that rejection, boom, we can see some more lows. So they're probably going to come back down here and retest these lows. In theory. Maybe yes, maybe no. Unless they get some better stuff going on. See what they talk about. Well, let's see. Clean it up. Let's clean some of the stuff up. Get that out of there. So you have shoulder here, shoulder here. So for them to create an invert head and shoulder, boom, that'll be a head right there. They have to stop in his ballpark here. All right, price needs to stop like somewhere here. Uh-oh. No, missed one. That's what happened. Click that. Boop, boop, boop. So price needs to stop here at 34. Boom. 34.42. If price don't stop in this ballpark or a little bit, it can go a little bit down or whatever, right? But it got to stop right here. It ain't nothing yet. If anything, they got a good double top on their damn hands because you have resistance here, quick bounce back to support, making a V, and it got rejected again here. So if they take out the load, then you have a double top, right? If they stop here at 34.42, then you got the inverted head and shoulders, and then they can possibly go see highs. But for them to actually go off like that, you're going to need a catalyst. So what are they offering? They're going to cause them to return back to some highs, right? And if this dude said play out by some magical degree, that is a $12.26 move. Copy that. Neckline is your breakout. Where do they take us? What is our measured move on this? If it do. Cool. That'll be $55.56 if it plays out. Now, let's say the theory of the whatchamacallit play out. The double top. That's a bearish pattern. So you still got a $12.84 move. Let's clone that. All right. Well, let's take you. This last lower low. Boom. Is our target. Was our breakout. The lower low, the 30.04 is our breakout level. And let's put this here. Boom. $17.21 is our measured move for the lower for the breakout of double top. There you go. That's below the 2008 levels. Boy. Yeah. You got a fair value gap back down here. A little small one. Got a little gappy gap. Yeah, you got a little sun right there. Yeah, so they can stop at 18, the 721, that's the zone they playing with. You feel me? So either maybe yes, maybe no. The world will never know, right? Like a Tootsie Pop. You never know. So it can go up, it can go down. The dirt or the sky. Will they touch the sky or will they touch the dirt? Stay tuned next time. Sauce Factory. So this is a monthly chart, so this can take a while to play out, right? Even if they so multiple ways to determine how long would this actually take to play out, right? You can go by a trend. You can actually draw a trend line, right? So you go trend here. Do do. That's the trajectory that they aiming at. So what we're gonna look at is when should they cross support, right? So where these crosshairs is, that is October 25, right? October 1st, 25, give or take. That could be where they meet their demise or savior, whichever one, who knows. So it could take that long for this to actually play out because this is a 1 month chart, right? Now, another thing you can say, what's the ATR on this? How much do it move in a month? They'll tell you how much it could move down here. Little math, blah, blah, blah. You can kind of run it. Ah, you're welcome, good sir. You're welcome. So that's one way of doing it. And then you can actually set alerts on these vertical lines or whatever. So you can have them go off. So give or take, it can get here faster or sooner. Depends on how they want to drive the stock. So if they have months like this, it can get there pretty fast. If they got months like this, it's gonna take a sweet merry time, right? Let's look at what it did last time. Boom. How long did it take here to here? Uh-oh, moving around thing. Okay. From there to there, it took possibly 4 bars, so that's 4 months to get there, right? So at same level, it can possibly take 4 months. Got the rejection. 1, 2. So let's say they move fast. You still looking at the third, June 3rd, give or take. If they actually just follow that same pattern of drop. Now let's say how long did it take from this rejection to get down to this level, right? This took 5 months. So SOS. They technically they tested resistance here, rejected 5 months, still around the same ballpark, give or take, right? Unless we want to say, oh, they didn't reject to this candle, so you can slide it over 1 additional month. And then they'll just add July 1st. So different little tweaks like that can give you a projection of how long it'll probably take for a price to get over here unless it's something that's crazy happen. They decide to flood the market. They got to have something good, a merger, something, right? Somebody buying somebody. If Verizon get bought out by AT&T, they'll go up. If they buy AT&T, they will go to the dirt, right? Something like that got to happen, or some crazy partnership deal will cause them to get that necessary volume to go off like that. So, in the meantime, between time, those your options. Okay. Any questions? Okay. Set your alert. Ready. Yes, set your alert. That's it. That's the best thing. I'm gonna tell you, like the best thing to do is set an alert, walk away, go focus on another setup. Not everything is ready when you want it to be ready. So you're gonna set the price alert. You try not to get too crazy with them because they can all go off at the same time and then you screwed, right? But general set an alert. When it hit, it hit. Don't even worry about it until that alarm go off, right? Make notes. Put notes on the great thing to do about trading view, right? Hit this little tab here. You see where it says Verizon, you can scoop that up, right? Grab that and drag it. Where it's at. Oh yeah, right here. Add notes. So you can add a note. Say check back, you know, for say DT or or it and where my end at? Boom. Head and shoulders, right? At boom. Now I got a note on Verizon. So when my alarm go off, I say, what I'm supposed to be doing here? Boom. The alert, the notice there. So I know exactly what I'm looking for. So when I come back, I know exactly what I'm looking for. I can put any other details like contracts, whatever, blah, 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 blah. All right here. If you look at my watch list, you see these little pencils next to gold, CL, and GC. Those are my notes I took while I was doing my back testing, while trying to figure out what do this specific instrument like. Not all of them are the same, right? So as I'm looking for my day trading opportunities, because I like the day trading scalp, gold and oil mostly, I have notes to say, hey, this what it likes, this what it like to do, this what I see, this what I recognize. So this is what I'm looking for the next day. These are my setups, right? So just put a note. If I forget, I go back and check it. If not, okay, cool. So the notes always with me on TradingView. Sometimes people say write it down. I wrote stuff down in journals. The journal being home, I'll be on the go. I may be on vacation. I may be somewhere. I may be anywhere. I may be at the gym. The alert can go off anytime. Future market runs 23/6, right? So I can be anywhere and I need my notes. My notes are on TradingView. Log into a device, boom, boom, boom. I'm there, right? So use the tools. They give you a lot of them. So there you go. All right. That's another little thing. All right. So, got 10 minutes, people. Y'all got any questions? And don't forget, last week video is up. If y'all didn't see it from last week, it is up on my YouTube channel. Y'all go back and watch that. Uh, like, subscribe, comment, and like. It's very important, people. I really appreciate it. You like and comment. Little fire emoji. You can just put a quick emoji. You don't even have to say nothing. Just put a little emoji. Boop, boop, boop. Help your boy out. Get those comments going so they'll pick it up and start shipping it out for your boy. All right. Any charts y'all want to see over here? If not, I'll let y'all go. I ain't gonna hold y'all all day. Oh, thanks, Neo. Yeah, don't worry, I got you. I got you, bye bye. Spy. All right. What you want to see with the spy? What you got? DK. Oh, Dick Sporting. Oh yeah, that thing right there, live at 5. Yeah, I like Dick Sporting Goods. That one, at one moment, it was behaving very lovely, right? And then it started getting janky. All right, I just posted my channel right there. Ain't no problem. All right, so let's go to the spy real quick. XP. Why then we'll go over Dick Sporting Goods. So, Dale, what you got for the spy? What's your thoughts on this? What we looking for? What we looking at? If anything, SPY going up. Nvidia controls the market. The top 10 holdings. As long as they doing well, SPY gonna do well, right? That's what that is. You're looking at day trading. Now that's a different story. Now we're looking at something else. Long term, it's going. Any plays for tomorrow day trade? All right. Do. Let's see. Let's go to the 4 hour first. Regular hours. Oh. Hmm. Do. Do. So we got liquidity there. There. What day is this? It's last Friday. Monday low. Okay, cool. Let's go to a weekly first. This is a clean chart. Well, well, well. So I gotta run my technicals, right? Doop, doop. Uh, weekly low. Do, do, do. Drop down to the 4 hour. All right, so we're in a range. Okay. New high. Let's go. Run it. So we already came back from 60% retracement. Now we haven't taken the highs yet. So, let's see what the 1 hour got to say. I was entering a pullback. Goes back to the 4. Look, got low momentum. I don't know if there's any news this week. Look like they're trying to pull it back down. This is a big imbalance right here from Tuesday at 9:30. That's a huge imbalance. They need to probably highlight that. Let me get on this 12-minute chart real quick. Yeah. I like for them to come back here. All right, let me get rid of this fib. Well, I also had this OB. Like that's what they tapped into. Ah, yeah. Damn, SPY 500. Okay. Mm. I like to say long if over 517.23. I'll go long because they're gonna sweep the high, so that's a 1 point move. That'll be a cool day trade. They're gonna just take out look. They're probably gonna shoot for liquidity before they drop it again. They still had this fair value gap that's not been price action have not came through, but I can see probably why they didn't come through because this one did not do a break of structure, so they probably ain't gonna highlight this one just yet. So this said maybe they'll come back down here, but if anything, it is bullish on a higher time frames. So yeah, they just found support on the 21. So you would have bought it here. You could have swung that over the next day, but they probably gonna come up here. This is a 1 hour rejection block. That's what they kept getting shoot off of. So if anything, they can sweep liquidity, do a Judas swing, probably take this high, take that high, then shift down. Because if you look at it, momentum been shifting to the downside for a while now. Only thing holding the boys up is Nvidia. But long as the riskier play, I'll let them get as high as they want. And then I'm a reversal trader, me personally. I'll be looking for the opposite. But if anything, they're gonna try to sweep that high as 517.23 or 518.22. But it's about you getting the right entry. If anything, I look for something else. SPY at all time highs, so it's a little tricky up there. But yeah. All right. That's my 2 cents on that. DKS. And that's not financial advice. It's a brother with some laptop trying to give you a little bit of game. Bada boom. Mm. They pulling back, huh? See what that. Mm. People have got what earnings? Thursday. That's the man. Hey, let's play the flush on it. As soon as that thing open up, they the flush. Let's see what they all time highs. On 12 my chart real quick. Oh, we at them. Yeah, buddy. We at them joints. All right, let's go back down. 1 week. Mm. So that's they did. Okay. Yeah, man. If anything, I'd play the flush whichever way it goes. Oh, you're welcome, Dale. Uh, yeah, play the flush. Look like they're gonna push it down. This thing been flying up high. Typically, big sporting goods run for earnings. They always run up. They've been doing very well, especially since they put Academy out of business. Per se, they put a hurting on Academy, right? When Academy closed doors, they open up more, especially out here. Academy was closed and they took those stores and started putting big sporting goods there. So yeah, they got something special up there. They got a brand, they got a great brand per se, right? That's they really pushing on. It's a fantastic brand. So all right. Okay, people. And on that said note, yeah, all right. I don't see nothing else. Yeah, I don't see nothing else. So, ain't no more question. All right, let me stop this recording.